Cairo. Next, I'll have to throw in the massage. The
Yeah, yeah.
therapist. I haven't gone to a massage in forever, so.
There's plane trips just down to LA, isn't it?
Yeah,
Yes.
yeah. We do Santa Monica once a quarter for the strategic coach.
Oh, Dan Sullivan or no?
Dan Sullivan, yeah.
Yeah. He's real big in financial planning circles.
Yes, most of the people. There's in fact I have to sign up for year 5 on this trip to see if I have to. It's $8,500 a year.
Right.
At the rate I'm at for four times a year, and we've got and the group's always evolving. People leave, they merge groups together. But so it averages about 30 people, and in there half of them are financial planners.
Yeah.
Which and some of them have just become just amazingly successful under his tutelage. That's right. Yeah.
He's got a lot of success. I think he knows advisors best. I mean, he's got a big track record.
It sounds very familiar.
Yeah.
He's
been in the game for at least 25 years.
Yeah, now he does this 25K club for $25,000 a year. You can coach with him and Joe Polish, who's another big success expert guru that made millions marketing the crap out of his businesses.
Yeah,
so there's all kinds of stuff. There's all kinds of ways to spend money.
I
developing your business and coaching.
There's another coach who left Dan Sullivan and wrote a book and stuff like that, and thanked Dan Sullivan in his book and stuff like that, named Ledoux, Michael Ledoux, very nice guy.
Haven't heard that.
And he was one of the top coaches. When I was at the end, he was coaching all business owners that had like 100 million, 200, 500 million dollar businesses.
Oh, yeah.
That's where he got out of the Dan Sullivan program. So he wasn't even doing advisors anymore. So it's just like, yeah, nice guy.
Very cool. What do you got? What are we going to talk about today?
Brexit. I'll do Brexit stuff.
Oh, good. Yeah. That's really good.
Talking about timing, the fact that you shouldn't time, especially the market rallying.
Don't time the market.
Yeah.
Although, if you were one of those, if I were in the stock market and felt frisky, I would have absolutely
sold out. Brexit.
No. I would have bought after knowing that it was just going to be just a bunch of noise. Yeah. Because how many times does the stock market drop 500-ish points over oil goes below 40 a gallon? Brexit.
It was a lot lower in February than it was the other day. But that was I think the Brexit thing was just the shock of it all.
Yeah, I wouldn't have sold. I would have gone, oh man, I'm buying a whole bunch now. It's on sale, and just get that little 5% jump.
It wasn't a high sale though. I mean, it went down like 2%. I think 2%. It didn't go down.
That's true.
The sad part. I mean,
it seemed like from a core number.
Right.
Because we all remember when it went down 500 in 1985, and but it was only 7 or whatever it was 2,500 back then.
Right. Yeah.
When it was the big.
Yeah,
crash. Black 87, right.
Black Tuesday, Black Monday.
Black Tuesday.
I remember that well.
Yeah, I remember being out to lunch at a restaurant here in Larkspur and people watching all of a sudden this murmur arising and people were looking at the TV behind the bar and oh my God. Because I think it was, that was 2,500, wasn't it, or something? Or
something like that.
Yeah.
It was and it fell 500.
The sad part is that the market was actually positive that year. People forget that.
Yeah.
The market, if you measured it, it was actually positive. Now, it had gone up 27%. People lost it 27%. It was up like 3 percentage points that year. Which people kind of, for a crash, it's kind of made, compared to 2008 or 2001, we're like, oh shit, you're down 30%. But it was actually a positive year.
So Mark, the email I have for you is, do you charge more for a longer term loan and interest in points?
Okay. Yeah, good one.
You guys.
Let me test my headphones.
Hey, Dave.
I can hear you very well.
Okay. Hello. Where are we starting? Yes.
Let's do this. Actually,
let's start with you. Yeah, because I'll chime in. I didn't bring, like I said, I've always got stuff I can talk about because I can leverage, past material. I got a thick folder here, which is just like this year's stuff.
And if you don't have a deal with
Brexit, that was very cool.
If you don't have a deal with the week, I do. But
oh, okay. No, I don't actually. So yeah, everything was a mad rush this morning and yesterday. So thanks for any help you can throw in there.
Okay. You guys ready?
Yeah.
Yep.
And there we go. Welcome. You're listening to The Best of Investing on Talk 910. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hunt of Pacific Private Money, one of California's fastest growing mortgage investment firms. And welcoming back Lou Batmale of LPL Financial. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 vacations given away during this show. Those vacations are free, but they're not sponsored by the radio station, but by Lighthouse Resort and Marina, located about 1 hour northeast of San Francisco. Their only request is a $100 cleaning fee to cover the housekeeping expenses. Today's trivia theme, in honor of the fact that we just had the Baseball All-Star Game, is Major League Baseball All-Star Game.
You did that just for Lou. You knew he was going to get
I
all
knew
three
he
of
was,
them.
that's right.
Ray,
I'll
I'll say
miss
Ray
all
Fosse
three.
for everything.
Ray
Ray Fosse's
Yeah.
Sorry.
All right. Here is the first one. Who did Pete Rose run over in the All-Star Game? No, let's see.
Exactly.
Okay, our website is bestinvesting.com. Lou, let's get right into you and Brexit.
Oh,
Still
all
on
right,
everybody's
all
mind.
right,
So is
all right.
the Hangover over?
Was there a sequel coming, number 4?
Yeah.
Hangover? Sorry. No, in the past year we've seen what appears to be an unprecedented movement up or down the stock market globally and general flight to safety all at the same time. So, the stock market's going up, the bond market's going up at the same time.
Yeah.
That's quite unique. Most view this as a period of unrest and as an excuse to tie your hands and say time to do nothing and just let everything play out. The markets are not telling us something right now. They're overreacting to things that no one can really control. Headlines can sometimes drive everyone's behavior, right, guys? For
Absolutely.
investors, and I think there are some valuable lessons to be learned while approaching your own financial future. And that's what I want to talk about today. So first, reacting is a trader's game, not an investor's opportunity.
Right.
I'm not trying to be profound. I'm just trying to say, hey, look, this is not a time to overreact to things. People who trade daily tend to forget that being invested is not a chance game where your quick skills and decision making lead the way to prosperity. Traders react, investors buy. The old adage is buy low, sell high. We're not advocating that anyone knows what the market will do. Most see things like Brexit as a deal breaker for all economies, while investors know when things go down, it's time to buy, not sell.
Yep.
So we've seen a little bit of rally here the last couple of weeks, and everyone's like, well, what should I do next? And this is what I want to get into real quick. You think you know, but in the end, no one really knows. So everyone on TV or a cocktail party has an opinion, and sadly, those discussions have an impact. The weakest person in the room or the unfocused person watching television is the person who does not have a plan or does not know what they own and why they own it.
That's
more,
kind of
more likely the truth, especially if you're an index investor.
Oh, totally.
Yeah.
So you should know your plan, and you should engage your spouse or family member in the plan. More importantly, you can engage an advisor to discuss what type of plan could look like and if you need anyone's help. In the end here, you know why you own stocks, you know why you own indexes, you know why you own bonds or oil or gold or whatever, but everything's performing at a record pace right now. It's really hot to be in certain parts of the economy, which we'll talk about today. But in the end, you have a plan which is maybe 60% stocks and 40% bonds, or 70% stocks, 30% bonds, whatever it might be. You have that for a reason, and the idea is to stick with it, not guess with it.
Yeah. So Lou, I just have to go on record. 3 weeks ago, when we did our show after Brexit first hit, I said, this is nuts. Just wait. Another couple of weeks we'll be hitting an all-time high again. So again, and it wasn't, even though the point drop felt a lot, as you said before the show, we were talking about, it was only a 2% drop.
Oh, yes, that wasn't much
like
at all,
it
yeah.
went 10 or
But
15%.
that was the United States, though. Didn't Japan and some of the other ones
Japan got buried. Japan actually absolutely got buried, and that was the currency agreement. Then Abe gets reelected, and Japan starts rallying again. Because what's happening here is everyone's acquiescing to problems, or should I say, general freak out in all economies.
Yes.
That's where everyone's freaking out right now. So everyone's buying bonds.
Yeah, and the British pound hit what, $1.30?
$1.29. Yeah.
$1.29.
$1.29. So that was probably the biggest shock. And so as I was watching the BBC feed, and those people were just kind of going crazy on television, saying what's going on, kind of like we watch our election coverage. But what you saw was, they were typing into Bloomberg the whole time, saying, "Oh my goodness, the pound dropped from I think $1.45, $1.47 down to $1.30 in a matter of hours." That's a huge. I mean,
it is, sure.
that's like saying,
Currencies, that's impressive.
yeah, that's saying $10,000 is worth $9,000 in a matter of a couple of hours. How does that happen? And the answer is they go, "Oh my God, if they leave the euro, then the pound has to be linked."
But they see. I don't understand this because the British pound was separate from the euro.
But it was still in business theoretically, still actively
okay.
traded. It was using for certain currency transactions. and it was very, very stable because it wasn't used that frequently. That was the problem. It's kind of used within Britain, as
Just
we understand
Britain,
it. Yeah. So
and what is the euro? What's that at now?
the euro's was at $1.10 earlier this week, $1.12, $1.11. It's kind of floated
Okay.
around a little bit. So, but it's been pretty stable the last couple of months. I got the printout on where it was a couple of months ago. It's kind of, I mean, it was $1.33 a few years ago.
Yeah, I remember. I went to Europe at that time. Perfect timing.
Exactly. So, well, a lot of people are saying, I'm going to travel to Britain right now and go get me some mashed mush peas and fish and chips because it's a lot cheaper now than it was before. But the answer, there is no answer there right now. I mean, so we're going to look back at this historically 6 months or a year from now and say, what did it really mean? The answer really is, for us right now, and the reason why all this is going on and why people are buying so many bonds and their flight to safety and why people are buying stocks because they have good dividend yields on them right now, is the fact that no one really knows how big of a problem it's going to be. The California economy, we're here in California, is almost bigger than Britain.
Yeah.
If
Right.
Scotland leaves or Northern Ireland leaves, they get a bigger problem. If there's tariffs slapped on them between France and Germany, they got a huge issue. The problem, as I said before in the show, I'll say it again, Europe's banks are extremely fragile. All of them. No, there's no great bank over in Europe right now. You sit there and go, there's a stalwart of banking competence. They're all like, oh my God, what's going to happen in Greece? What's going to happen in Italy? What's going to happen in Portugal? Because if anything bad happens there, my bank's going to get affected.
Well, they keep having to bail them out.
Right.
And Greece keeps getting bailed out every time.
Correct, because they can't make pay their bills.
Yeah.
And I mean, Italy's is stronger, but not super strong. But Portugal has the same issue too. They're all tourist economies that kind of thrive on people visiting them over the summer, but they can't pay their bills in the winter. And that's going to keep happening. And look, no one's told me yet, and I haven't seen it. Maybe you guys have. How does this make Britain better? What
Getting out of it.
right?
Yeah, protectionist tendencies and policies have never been a positive in the long run.
No, and
There's no historical precedence for it being good news.
right. No,
Wasn't the theory that there were all these people who were just taking advantage of the system?
correct. So if you talk to people, on boots on the ground, they say in Britain, the problem was that someone from Austria who was an architect could move to England, work for 2 years, become a citizen, and entitled to all the same rights as a British citizen. That upset everybody. Much like in California, people get upset that they cross the border and come up here and have free health care or free education or free things. It's the same program. But there's a system in place in Britain, or actually the EU, I should say, excuse me, where everybody can do that across all those countries. And Britain being the strongest country, and France and Germany getting weaker over the last couple of years, they've seen an influx of people coming over. And then when, I'm not trying to isolate one area, but you have 1 million Syrians end up in Germany, and they're sitting there going, well, how soon are they going to be in Britain? Because we're the best country to be in.
Sure.
And that's where everyone kind of freaked out.
Yeah.
So the challenge, right now is how do we unravel the currency, which is a big deal? How do we protect trade agreements that are in place right now? And how much business is, the United States, I think, exports 57 billion to Britain every year, and we buy about 50 billion from them each year. So it's not a big trading partner of ours, but it's something we all have to monitor as we move forward.
Absolutely.
And we don't know. That's why everyone's melting on buying stocks right now.
All right, guys, we're going to cut to our first commercial break. Before we do, make a couple of announcements here. So get this. If you go on to the Best of Investing website, and right on the home page, you'll see something about paintball tickets. All right? You guys like paintball? So we're in sort of a partnership with this company, and if you click on the button, it'll be 85% off.
Wow.
Yeah.
That's
So,
amazing.
hey, I mean, click on the button, check in for more details. Because I've got a little video and all this kind of fun stuff. But it's for paintball tickets. Go ahead and click on, go to the Best of Investing website and click on that tab. Okay, so here is our first trivia question about the All-Star Game. Why did the 2002 All-Star Game end in a tie? What was the reason for that? All right, the first caller with the correct answer wins a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190 to answer that question. Why did the 2002 All-Star Game end in a tie? Don't touch that dial. The Best of Investing. We'll be right back.
I have a guess. I don't know, but I have a guess.
They ran out of pitchers, wasn't it?
Really? Maybe that's.
They went to extra innings. They ran out of pitchers, and Bud Selig goes, "Risk, anyone getting hurt? Let's just shut this thing down." Bud Selig, that's my answer. Bud Selig's Incompetence.
Yeah.
That'll be my answer.
That's always a good answer. Is the commissioner's incompetent.
Yes.
I can't believe Cueto got shelled for those 2 home runs.
Yeah, that's brutal.
This is I was so swamped. This was the first year in I don't know how many years I didn't watch the game.
Oh, okay.
And I always watched the All-Star game, but
You like the All-Star game? Why? Because I kind of watched it. And I'm like,
just because you got all the named players.
yeah, and you're a real baseball fan.
Yeah.
You know these guys, and I just most of them are. I'm such a casual baseball fan, and mostly a Giants fan that I just everybody else on the other teams I don't even know who they are. Everyone's just Joe Smith.
I hope there's a guy named Adley Hammaker who played for the Giants many years
exactly.
ago.
I remember,
and he got shelled in the All-Star game. He was never the same again.
Yeah.
I remember
He
later
was
in his
at 5
career.
runs.
1985, he gave up the only Grand Slam, the first Grand Slam.
Yeah.
Yeah, Ali was great for a while, and then I guess towards the end of his career, he just
It was terrible.
he never knew if he was
Yeah.
going to be good or horrible.
No, you're right. It was, I think that right after that All-Star game, it went all downhill from there.
Yeah, I think Cueto's a little tougher than that. Plus, he doesn't speak English, so.
That's right.
Did you speak English?
Well, he always has a translator.
Oh, really?
Always is
He
Yeah.
speaks very poor broken English.
Oh.
He
Yeah.
can, but he likes to do the
I do
translator.
like him as a pitcher, though.
Oh yeah, he's fine.
Those agents make him keep the translators around for protectionist purposes.
So we can
Not a
keep.
bad
We can do another.
Yeah, I can
Another 10 minutes of this. Yeah.
Right.
And I was going to just throw out. I was going to ask somewhere in there on search, just kind of. You had mentioned that there have been a lot of fluctuation in the marketplace in the last year, but if you just go back and look at the trailing 12 months, the stock market is pretty much where it was.
We're
Index-wise,
just up 4% now, Mark.
yeah, year over year.
Year over year. 1 year just at 4% the S&P.
Okay.
This week.
This week. Okay.
This week.
Because of this week.
Yeah.
Because it was at 0.
It was at 0 just 2 weeks ago.
Yeah, 2 weeks ago. Right.
Yeah.
This week it's up 4. Okay. Well, that's actually not.
Yeah, so that's
okay.
something to talk about.
All right, good.
Ready? Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn and Lou Batmale. When we got to the first commercial break, we asked this trivia question: why did the 2002 All-Star Game end in a tie?
Bud say leaks incompetence.
That's
I'm
always
gonna-
the answer.
I'm going to guess it was a rainout. No.
No,
they ran out of
actually,
pitchers.
they ran out of pitchers.
Yeah.
That's it. They didn't want anybody to get hurt.
Yeah.
Very good.
I knew Lou would know all these things.
Of course. The next two are a little harder, though.
Right, I can imagine.
Right.
So, Lou, why don't you continue on?
Yeah, so I talked about, the first thing is this isn't a trader's game. Second is know your plan. The third thing is the most suitable investment is never really known until it's already passed. No one in the crash of 2008 said buy cash or go into cash, did they?
No.
I don't think
But everyone reflected in 2009 like, oh, the best thing to do last year was be in cash the whole year. No one really did it. We don't know what the best investment is going to be right now. The other thing too is that when you think about it, I'm talking about crashes as the market's gone up, but it reflects on timing. The problem here is that everyone's like, how can I time this thing? And the answer is you cannot.
Yeah.
And the issue is in March of 2009, the whole market started turning around. We've basically been going up ever since, slowly but surely, but ever since we've been going up. And that's the problem with everyone is most people stayed in cash after 2009, and some still remain there. Some never got involved again, and that's where you miss the market. You don't want to do that because we're trying to outpace inflation. It's really hard because there's not a lot of inflation up there. But I think the biggest thing to look at is the bond market, really. I mean, everyone talks about the stock market. It's covered on the news every day. But we have the 10-year that dropped to, $1.32, $1.36 in the 10-year Treasury.
Almost a historic low.
And you have all these countries now that have negative yields. Switzerland,
Yeah.
Japan.
Crazy.
You give someone $10,000, they're going to give you back $9,790 in the future. Why would you do that?
No,
It's
it's
like,
like,
it's like,
a mattress.
My mattress is better than that.
Yeah.
well, that's the answer is that people need the security of government debt to boost up insurance portfollios, corporate bond portfolios, and things like that. That's the backdrop of everything.
I'm okay. I went to the bank and I tried to ask for a negative loan. They laughed at me.
Exactly. They'll
See,
never
just
do it.
like what you're doing now.
Exactly. They'll never do it. But I mean, that's indicative of why you're seeing American interest rates drop so much. So I mean, think of the whole sphere of investment products you can buy out there.
It's all based on alternatives.
Right, alternatives and bond, oil, gold, whatever you want to get into. And we discuss all those things. But truth be told, when you look at 1.36 Treasury, or now 1.47 this week, it jumped up, or 1.45 jumped up this week a little bit. Why is everyone doing that? And it's like, well, you're an insurance company, and you just received $1 billion of cash, and you got to put it into your portfolio somewhere.
Yep.
And you're in Japan, or you're in Germany, And you're sitting there going, well, where do I want to put this money across the globe?
Yeah, where I'm going to park it.
Yeah.
Where am I, yeah, and they can't park it in mortgages. They can't park it in banks right now. Those are all not very secure investments from where they're concerned. So sit there and go, well, I'm going to buy U.S. Treasuries.
Mhm.
So right now, I mean, I get the call all the time. When's Treasury rates going to go up? I mean, every single report I've read over the last 3 years, 4 years, interest rates going to jump up 1% this year.
Yeah,
They're all
that's
gonna,
right.
4 years in a row we've been
Yeah.
saying that.
Yeah, and nothing's ever happened. And this year, right now, the odds are that the United States Fed will cut rates again this year, potentially, to next to nothing. They went up 25, but they're going down 25 points. The Bank of England is going to drop because they're so skeptical about how this thing's going to go.
Wow.
They're going to cut already.
I would think
And-
that for Mark's business, that it'd be like shooting fish in a barrel. Because I don't even know why you're paying 8%. You don't have to. Look at these rates over here.
Right.
You're paying 1-2%.
Because we're crazy.
Yeah.
Come on down. Those used car commercials.
Yeah, that's right.
Crazy Eddie.
That's a tough part. Is how do you calculate risk in this environment if you're an investor? And as I say to people right now, the thing you got to sit there and say, do I have a 1 month, a 6 month, a 1 year, 5 year, a 10-year plan to this whole process? And that's where people are really losing right now. Right now, the market is high in some realms if we're hitting new highs, but where do you want to be 2 years from now?
In Dutch tulip bulbs.
Yeah,
Just like the
gosh.
1600s.
That was the biggest crash
Bound to
ever.
come
Yeah.
back.
Biggest crash ever. So it was, yeah. I mean, there's always reasons to talk about the economy going down or falling apart and issues out there. And conspiracy theories have only thrived in the internet environment. That's probably the bad thing that's come out of the internet is conspiracy theories
Well,
that are out
that's
there.
one of the things I like about real estate is they ain't gonna make no, as Will Rogers said about land, they ain't gonna make no more.
Right,
Now, you have to-
exactly.
it is location and all that, but
Right.
everybody needs a place to live. We're all not gonna live in tents.
But
True.
clearly, few people are going to invest all of their retirement assets in real estate or even real estate-backed investments like mortgage pool funds or trustee investments. So when you're talking about a balanced portfolio, you're looking for, of course, we're all looking for yield. And a couple of weeks on this show, we were talking about how year over year, trailing month, all three indexes, the Dow Jones, the S&P 500, and the NASDAQ were basically year over year zero. I mean, just a lot of up and down in between, but year over year we were zero. At least, Lou, so how are we doing now? We're up a little bit, right? Because we did hit some new highs on the index.
Well, yeah,
Right.
before you get into that though, I remember back in, I think it was 1994 or 1990.
Don't kill the demographic, okay?
Yeah.
Don't go younger.
It's too young. Is the NASDAQ hit 5,000?
Right. It
What
was 99. It was 99.
99, that's right. It was
That's right.
1999.
No,
That's right.
and I met an investment advisor who said it'll hit 5,000 again in 2016. He said that to me.
When?
I'll never forget it. In
Wow.
2000, or 2001 when it crashed.
When it crashed?
Yeah, he goes, it'll be.
16
So he was
Well,
predicting
That's
a
pretty good.
15 years.
But what he did is he calculated, the index and a normalized return pattern
Yeah,
in the index, and goes, it's going to take that long for it to come back.
yeah, but for the
He
people
was
who
right,
invested in 1999, it's been 17 years. And
Right.
Well, I
Yeah.
wonder. I'm guessing a pretty small percentage of the population has actually kept a significant investment.
No, because they lost most of it. I mean, it went to zero, some of it.
Correct. Oh,
Yeah.
I mean, but no. If you look at, as of Monday of this week, I know it's Saturday right now, but the S&P 500 for the year is in the 1 year, 12-month period. So call it July of last year to this year. It's up 6%. Dow Jones is up 6.4.
That's not bad.
That's not too bad.
Those are good.
The Russell 1000 growth index is up 5.8, and the Russell 1000 value is up 4.9. So those are quoted by J.P. Morgan on their weekly market recap. I look at the S&P 500 as of yesterday, and the 1 year number just in the S&P 500 is 4.81. So you're seeing a lot of numbers come out there, but in general, it has grown positive. It was negative most of the year.
Yeah.
Out of the last 12 months, we're more negative than we're positive. Every
It
month.
just took the last couple of weeks to
Yeah, and this is the problem. No one knows the answers. So the idea is have a plan, invest your money wisely, and stick to the plan. The question everyone should be asking themselves right now is where do I want to be 1 year from now? And the other thing I brought up and put down here, it's July, guys, and I do this every year in July, and I enjoy doing it. Now's the time to start thinking about your retirement planning. Now's the time to reflect on how much money you made last year and the taxes you paid, and what if you saved money this year? and didn't pay as much in taxes.
Well, you
Right.
ask what in a year and a half or 2 years from now, I want to win the lottery. Start buying the lotto tickets now, or wait?
Chance, the better odds sit in front of a lightning storm, right? So
That's true.
Move down the south.
But that doesn't pay me anything.
No, it doesn't. Well, it gets you free medical care,
Yeah,
right? Depending
yeah,
where
that's
you're
right.
located. So, but the idea is that everyone needs to focus on you really don't know where this market's going, so don't try and guess at it. No one said 2 weeks ago when the Brexit thing hit that our market's going to rally to. Oh, Mark didn't. Sorry.
That's
But
right.
everyone
That's right.
else,
I predicted it.
everyone else was somewhat in the clouds, going, this could be the meltdown of all meltdowns. This could be the whole economic collapse.
Of course, predicting it and then cashing in on it are two different things.
Yes,
That's
indeed.
always kind of hard to pull that trigger sometimes.
The people that predicted the '87 crash never predicted anything right again. The people did in
Interesting.
2000. By and large, there was a lot more success in that. The people who predicted stuff in 2008, the people that weren't betting against the mortgage-backed securities like in The Big Short.
Yeah.
The people who were just talking about the market in general. They haven't been right since either.
Interesting.
They're always on TV.
Interesting.
Yeah, everyone was on TV saying, "Oh, this is gonna happen. That's gonna happen." No one really knows.
Yeah.
Kramer doesn't know anything. Yes. You watch this stuff long enough, you stay invested, you're gonna be fine.
Yeah.
Because in the end, the economy will grow over time. That's what you got to remember.
All right, let's cut to another break here. Before we do, we got to mention something for the Hornblower Cruises and Events. I love
Nice.
the Hornblower. So it says, imagine yourself aboard a luxury yacht with your closest friends and family. Indulge in deliciously prepared food and scenic San Francisco Bay views. Hornblower Cruises and Events offers 3 types of dining cruises: a free-flowing champagne brunch cruise, fun and lively supper club cruise, and an elegant 4-course dinner cruise. Fun for all ages. Book now at hornblower.com. You guys have been on the Hornblower, haven't you?
Yeah, oh yeah.
That was
Food is
great.
Excellent. Entertainment is always good. All right, here's our second baseball question. This week in baseball, remember Milan?
Yeah.
Okay, who won the first home run derby in 1985?
Ooh.
Ooh, got you on that one. And that was before the 99.com.
It's probably before Lou was born.
Yeah,
Before the steroid era.
Before the steroid. That
Right.
was right about there. All right,
Yeah.
stay tuned. The best of investing. We'll be right back.
Fine. Wow.
85.
Don't look it up on the
I'm not. I'm thinking Cecil Fielder, but
Ah,
maybe a little.
Cecil Fielder.
It wasn't Barry Bonds. I know that much.
Yeah.
He was a stick back then.
Yeah.
Yeah, right. He was a skinny little
I'm trying
tramp.
to think. God, it was.
And it's somebody you'll know the name.
Yeah. 85. Trying to think. Well, the Mets won the '86 World Series.
Sure.
Year before that,
185 was it? Detroit 183.
83. 85.
185. Oh, gosh.
I'm not allowed to look it up on the internet, so I won't
Yeah.
look it up. But it could have been.
I forgot 185. That's funny.
Wasn't the Giants, that's for darn sure.
Yeah.
Um,
There you go. Start 2010 for that one.
Going to email time?
Yes.
Was it the Reds or no? No, it wasn't the Reds.
No.
Reds won in 90.
90. Yeah. Still depressed about that one. As I am
Yeah.
in 2002.
Yeah.
All right. Ready? Here we go. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Mark Humph and Lou Batmale. Second trivia question about baseball. The All-Star Game. Who won the first home run derby in 1985?
Jose Canseco.
No, that would have been an interesting guess. No, Dave Parker.
Dave Parker.
That's
won.
close. I was
Yeah,
close.
you were
close.
Yeah, we were trying to remember who won the 85 World Series. Maybe it was the Seattle Pilots? No. Okay.
Washington Senators? Yes.
Washington Senators, exactly. No, the
Andrew Doubleday?
No. Yeah, exactly. No, my favorite, Cy Young from the Cleveland Spiders.
Right.
Okay, email time. Mark, it says here, do you charge more for a longer-term loan in interest or points? Yeah, interesting question.
Okay, so for listeners out there, Mark Hunt, president and broker for Pacific Private Money Loans. We're a alternative to bank source of real estate financing for people who are finding themselves unable to execute with conventional lending. And there's a lot of reasons why people find themselves in that position. Probably the most common is speed. People trying to buy a property and close quickly. Maybe they're competing with all cash buyers. Another one would be maybe you're looking for a bridge loan to buy your next house and you don't want to sell your existing home first. and your bank tells you you don't qualify anymore to have 2 home loans simultaneously, and that would be due to new, stricter banking regulations that say you have to earn, X amount of money before you qualify for additional mortgage debt. Another might be you still have a credit glitch, but you're working on that, but you want to buy now. Or maybe you're a contractor or fix and flipper, and you already know that bank financing just simply is not an option, hasn't been for nearly 10 years now. So a lot of reasons why people look for alternative sources of financing and go the what used to be called the hard money route, but we prefer calling it private money financing now. It's a softer, gentler term, because we really don't resemble the predatory, shark-like lending practices from 15, 20 years ago. We're really a new industry. We're regulated. We're the new subprime. We all remember subprime in 2004, 5, 6. Fog a mirror, get a loan. We're not quite that, no, because we're generally conservative in our loan to values, and we do want to make sure that yes, you can afford the loan we're going to give you, and yes, you have a way to pay us back, because the private lending industry generally is a short-term lending industry. We're a means to an end, not an end unto itself. We're there to get you, help you do the transaction you want to do, and then you can conventionally refi or sell the property if that's what your strategy is. So we generally don't make long-term loans. Our loans are generally 6 to 12 months, sometimes 18 to 24, but we can do a 3-year loan. We can do a 5-year loan. I just would be concerned because, again, our rates are oftentimes right around 10%, maybe a little more, a little less, depending on the situation and the LTV and the borrower strength, et cetera. It might be so 9 to 11% is a pretty typical range for a private money loan. So I would be concerned with anyone who needs long-term financing. But that being said, we've made loans for 36 months, and in fact, I had one just pay off. That was a 3-year loan. It was coming to term, and they were able to pay it off. The answer to the question, what is the question? Well, the question is, do you charge a higher or a different rate, and or do you charge more fees for a longer term loan? And the answer is generally no, we don't. The reason is because I do have investors that don't like getting paid back that quickly. Some of my investors actually prefer a 2-year loan or a 3-year loan as opposed to a 12-month loan. I will just tell you that our demand is such that I don't get that many requests for a 3-year loan or a 5-year loan. But if we did, the interest rate and the points are generally going to be the same. I'm not 100% sure how that compares around the industry. Of course, you always want to shop around if you're looking for long-term financing. I know we're uber competitive in the short-term financing realm, particularly when it comes to speed and reliability and stress-free financing. So if you have a transaction that maybe you're a realtor or a mortgage broker, and you've got a client whose transaction is in danger and they need a rescue me situation so that you can bail them out later with a conventional loan, come to us. We do a lot of that. In fact, I got a text last night from our good friend Jeremy, and said, I may need a short-term 1-month loan from you, buddy, to help a client that it's going to lose a transaction, but I can conventionally refinance it within 30 days. So we're talking to him right now about that. But anyway, Pacific Private Money at pacificprivatemoney.com. Best way to find us. Our phone number 415-883-2150. Call us or go to our website for more information about Plan B financing strategies. Fast, painless financing to rescue you or your client's transaction.
Yeah, there was a loan that I had heard about recently where this gentleman wanted to buy these apartments, and he had to bid against 15 other people. So in order to get the deal, he said, I will close in 10 days, no contingencies, no financing contingencies, all cash offer. Well, he didn't have the cash. So what he did was he borrowed against another piece of property that was free and clear at 50% loan to value. And that's where he got his cash quickly. And he was willing to pay 9.25%.
Right, and companies like, and private lending companies like Pacific Private Money, that's exactly, we love those requests. Our business model, we're set up and geared toward fast closing. So we'll get a call, on Friday afternoon saying, hey, I got a deal that's got to close by next Wednesday. Now, do we enjoy getting those fire drills? You know, well, I know my doctor doesn't, but she takes direction from me, and she'll make it happen. But you know, more often than not, we're you know, between 5 to 10 business days in our closings. But we do exist for those emergencies, and again, that's why we get paid. And you know, maybe there might be a slight rush fee depending on the complexity of the deal, but you know, the whole thing is information is power, and a call doesn't cost you anything. We do not charge anything up front. In fact, no upfront fees are allowed by law when it comes to residential financing in today's world. So, you know, you can call, have a conversation, submit information, have more conversations with us, and then if you decide it's not for you, you're not out any money. So it doesn't cost you any money to get information. So again, give us a call at pacificprivatemoney.com, 415-883-2150.
And your rates are between 9 to 11, but you're still paying the clients over 8%.
Right. So we use private capital to finance our loans, and we pay those private individuals who are our investors, those who invest with and through Pacific Private Money. They're getting right now, on average, about a little over 8% return, annualized return on their money. We've been paying that out consistently for 3 straight years now through our Pacific Money Fund. We also have some work with high net worth individuals who prefer investing in individual notes, although we're doing more fund transaction these days than individual notes, just because it's easier to scale. We're in control of the capital, and we can close quicker. And again, speed is the name of the game. So again, for more information, look us up.
Very good. Lou, question comes in for you. It says, when the stock market hits new highs, it just did.
Right.
How often do you reposition portfolios?
Well, if you're in a long-term investor, and I mentioned looking through your plan, and you monitor things every 6 months or so, you're supposed to take a quasi approach of I sell high, buy low. We're in a unique situation where stocks are high and bonds are high, so people have to be really, really careful right now about rebalancing. And this gets to the point, if stocks get to be too expensive, they'll eventually go down. I mean, right now we're running at about a 17 price to earnings ratio, maybe 17.5. The market, from a valuation standpoint of what companies are actually earning, is pretty high. But the dividend yield's pretty good, around 2% on average in the S&P 500. So that's somewhat healthy. But you gotta remember, stock buybacks. Companies are buying back their own stock.
Treasury stock, they call it.
Yeah, that's what's driving a lot of this stock buying. So people have to be careful right now. And I'm not going to sit here and say this is the ultimate high or ultimate low in the market, right? I'm saying you need to pay attention. And yeah, if things have carved out, and maybe what we've seen, this is the educational piece that everyone needs to pay attention to the last 6 months. We had a growth rally, right, going into last year. Bigger stocks that tech stocks that people might think of, Intel, Apple, Facebook, and stuff like that have done really, really well. And value stocks did poorly. But right now everyone's like shopping yield, right? I want to get 4.5% on my money or 3% on my money. I can do that in certain stocks, specifically utility companies or telecommunication companies. And those indexes have really gone up over the last couple of months. So what you're seeing here is they're calling it a junk rally, because they're not buying the big names everyone's used to that are really involved in all the volatility out there. I don't like saying names of specific companies. I'm not recommending them, but something like Netflix is a big name that's out there. Tesla's a big name out there. These are stuff that's been really focused in the press, moving the markets back and forth over the last couple of months. Until recently, everyone's like, no, I just want something better than 1%. And they don't want to get something that's marks right now because it's a little tied up. If they want it liquid, they say, I'm going to buy stocks. And they go, hey, let's buy these dividend-producing stocks. I mean, Johnson & Johnson's at an all-time high. That's just one stock you take a look at.
But that's the funny thing is it's the question comes in about repositioning, but in a sense, isn't that still kind of like market timing? Because you're deciding, we're at an all-time high. It's not going to go higher.
That's an inappropriate way to look at it. It's like, if you started with a 60-40 portfolio, a couple years ago, and you're at 75% stocks and 25% bonds, you got to think about repositioning. And there are still some inexpensive things out there. Specifically, the international sector's a little bit inexpensive, especially over in Europe. So, that's exactly that's back to Mark's point earlier. Is like this is a bottoming process, hoping things go up. Emerging markets is another area where people are focusing their attention, saying that over the next 3 or 4 or 5 years. Look, I mean, the market's had a great 7-year run, 8-year run, and no one's been right about picking the high or picking the low on it.
Yeah.
But repositioning is what you're supposed to do. It takes discipline. Discipline hurts sometimes.
Yeah, it does.
Whether you're doing a health regimen, a workout regimen, or looking at your investment portfolio, or visiting with a financial advisor, it hurts to sit there and say, yeah, I got to sell some of these winners and buy some of these losers. And you're like, I don't like that, but you know, 3 years from now, 2 years from now, you'd be a lot happier because winners, as I say, always rotate. Every
And
single
someday
year.
my buggy whip company will come back.
Right,
I
nice.
guarantee it. And Lou, how do people get a hold of you if they want to call
yeah,
you for some advice?
Definitely call us anytime at 415-256-8970. Located in the Bay Area. Always have complimentary discussions with people, review portfolios, whatever they need. Also, we have a website, which is LOUISBATMALE.
That's your
Type
first
it in
and
there.
last name. Very
That's
good.
it. Comes right up every
All right.
single time.
All right, we're going to cut to our last commercial break. Before we do, join Sail Now for a day of sailing. Blue skies, good company, and fun on the beautiful San Francisco Bay. Enjoy a nice picnic lunch on Angel Island. Check them out at www.sailnow.com or call 650-619-6896. All right, here's our last baseball question. In 20 years, from 1963 to 1982, the National League won every All-Star game except for one. In which season? And this was kind of a well-known game. But I found it's interesting because the American League's been kind of on the hot streak for
Right.
the last umpteen years.
Right.
So here's our question. In 20 years, from 1963 to 1982, the National League won every single All-Star game except for one season. Which one? All right, stay with us.
Winners always rotate. That's my point.
That's right. Yeah, stay with us. The best of investing. I'll be right back.
Ooh.
Yeah, that was a long one, but that's okay. Yeah.
I would say 1982 because, you know, hence the limitation on time limit, right?
Mm-hmm.
But
It's okay. We got 10 minutes and 30 minutes. It's
what are we going to cover? What are we going to cover?
okay. Invalid. 10 minutes. What would you like to cover? Predictions or?
I can do my little guessing game of over the last year the price of different things and just look at some.
Yeah, let's do that.
Okay.
All right, so I can make you guys guess a few things.
And maybe cover the fund a little bit.
Yep.
Right.
See how fast they're-
That's perfect.
Let's do it. Make one little announcement for these guys. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hahn and Lou Batmale. Last trivia question. In 20 years, from 1963 to 1982, the National League won every All-Star game except for one. In which season?
1979.
No. 1971 was the only year the AL won, and they won the game 6-4 at Tiger Stadium. The MVP was Frank Robinson. If you remember, Reggie Jackson hit that towering home run off in Detroit off the, I don't know if he hit it out
I
of
don't
the
think I was
stadium
born
or.
yet.
All right, never mind.
I was.
You were.
I was
You
born.
rascal. You rascal. You got it. So one last announcement here. For imagine your child cannot hear or speak. What do? Where do you go? You check out the Weingarten Children's Center. They're actually going to have their second annual chili cook-off at the San Jose Flea Market on Saturday, July 23rd. Last time, one of the contestants went on to win a world champion chili cook-off.
Wow.
Sounds pretty good. So check them out at listenspeaklearn.org. All right. So, Lou, you got a guessing game for us.
Well, I think it's important to reflect on the last 12 months or even 2 years as to how market movements have changed and what's really occurred. And I like doing this with people because, you know, our memories are very short-lived. We live in a television age or an internet age where things last about 3 seconds in our brains.
Tell me about it.
So I want to go over this real quick. I'm gonna go right up your guys' first alley real quick. In July of 2013, what was the average 30-year fixed mortgage rate?
July of 13,
July of 2013.
A little while.
4.2%.
5%.
Nice, 4.68. Very
Wow.
nice,
Ooh,
very
right in the
nice.
middle
I
there.
knew that'd be
High
right.
five, everyone.
What was a 6-month CD yielding at?
Ooh, 2.2.
I say 3.
0.39. 6-month CD.
So, 6 months.
That's
I
right.
thought, you
gotta
said,
pay
I
attention.
thought you said 60 year.
No,
Go
that's
ahead.
it. All right, so, okay, let's go this real quick. 10-year treasuries in July of 2013.
Let's see, wait. I'll go by 2.2.
Yeah, about 275.
2.65. You guys are impressive.
Oh, he's good.
Now 1.37. Think about that.
Yeah.
It's dropped a point since then, and everyone thought it would go up a percentage point every single year. We should be at 4% right now.
That's true.
All right, and then let's go with gold. This is kind of interesting. Gold, July of last year in 2015. What was it at? I'll tell you, it was over 1,000.
Over 1,000? 1,100.
1150.
1159.
Wow. Darn it! I was
What-
so far off. Like 9 points.
What was it in December of 2015?
It was up to 1250.
It was 1,060.
Where's that down?
Yeah,
Went down.
and now it's at
Oh,
1354.
Yeah, now it's 13.
So this is kind of these are the tough things that people. The pound last year this time.
Still weighed a pound. 16 ounces.
Right.
The
British pound.
147.
Yeah, about 150.
154,
Wow.
and now 130. So and in the beginning of this year it was at 147.
Oh, that's
So yeah, as you're kind of looking through those things, you're seeing that the prices are all over the place. And people talk about the jump in silver too. Silver was at $15 last year. Now it's at $19.72. So in gas and oil, I mean, okay, oil is a funny one. So okay, oil in July of last year, at a barrel,
$35.
It was higher than that, like 50.
it was 51.61.
Oh, wow.
But in December of this year, it was $37.
That's what I was thinking.
Right. It was earlier that was around 26, and right now 45. I think today it was 43.
Yeah.
So I mean, or this Friday I should say. But the problem we run into is that people forget just not that long ago. I mean, interest rates were at 3% in 2010 on the 10-year. Mortgage rates were climbing to 4, 4.25, 5. I was like, oh no, and then this is what's kind of refueled the refinancing boom.
Listen, I still remember money market rates paying 16%.
So do most of my clients, and let me explain what happened there, okay? Because it's very different.
Jimmy Carter.
Well, inflation was out of control, and this guy Paul Volcker came in and raised interest rates to kind of break the back of inflation. That happened, and right now we have almost zero inflation. We look at these numbers.
I don't know.
Right?
I go to my grocery store and I don't see zero inflation.
Well, meats come down, buttermilk's come down, milk's come down over the last year.
Does anybody still buy buttermilk?
Well, if you make ice cream, they do.
Okay.
So that's
Okay. Homemade ice cream.
but so yeah, I mean it's a commodities-driven thing. But no, by and large, it has gone up, and real estate's the thing that's driven a lot of it too. Rents have been going up.
Yeah.
So that's where you see a lot of inflation, and I think that's the problem is we can see a lot of inflation in our economy as we personally interact with it all the time.
Well,
But-
people who have jobs and you've got a big demand. I mean, it's just a supply and demand thing.
Correct, and that's why wages are starting to creep up, but they haven't gone up a lot. And when you relate, how much I'm making compared to how much inflation's out there, people haven't been doing that well. Social Security hasn't raised rates in the last couple of years.
No, and people's income going toward rent went from 34% up to 40-something percent.
Or
Right.
60%.
Wow.
If you're not killing it, making 6 digits a year.
Right, no, it's great. And if people wonder why, I don't like to get political. And this is 9:10 though, but in the end, you look at things and say, why are people looking at Bernie Sanders and Donald Trump as potential, presidential candidates? And everyone's kind of fed up with what they have right now. Most people on an inflation-adjusted basis in the heart of America, go 180 miles in from each coast and measure everyone's income. And most of those people have not had a raise on an inflation-adjusted basis in 30 years. Most of them. You look at them. They were making $32,000 over 30 years ago, and now they're making $60,000 in that span of time. So it's, the inflation-adjusted basis, they're not making more money. And that's why people are upset. And that's why people are getting angry saying, I want someone who's going to shake things. Yeah. In the government, are they spending money wisely? Now we have, so I'll give you this stat. This is the one that scares the living daylights out of me. And this is not a reason to sell the stock market, okay? If you measure the net worth of the stock market, if you sold every stock in it, you come up around $23 trillion. What's the net debt of the United States of America? Remember, when Bush left office, I think it was $9 trillion.
20 trillion.
It's $20 trillion.
Hey, I got one right.
So if you liquidate all the stocks in America,
You can pay off all of that.
pay off all the debt. Pretty scary. In the end, we get about $3 trillion of tax revenue a year. We spend most of it. Actually, more than most of it.
Yeah.
So that's kind of the problem. So these are the cycle things that have to change.
And it's interesting that you're not, hearing the scary stories about the national debt, but in fact, there's, we're ticking ever closer to, there's that imaginary line that, when crossed, we're going to be unable to keep up with the
$1
debt.
quadrillion. That's what it's going to be. After trillion comes quadrillion. It's just another number, just three more zeros.
Right, and the problem is that the debt payoff, they have gotten better at spending money and paying down debt, but the problem is that we're not focused enough on it or political upheaval over it, and they can keep doing it. You know why? Because debt's so cheap. That's the problem. It doesn't cost them anything to lend money or
Well,
borrow money right now.
inflation's not out of control, so they can just keep printing money.
Right.
So once interest rates actually do go up a couple of percentage points, I think then we're going to be having the conversation about the cost of the national
Right,
debt.
because the government can't afford the interest payments at that point. That's the problem. Now Trump had an answer. It's pretty funny. I'm going to refinance the debt like he refinanced all his casinos.
Well, it's funny.
File bankruptcy and then refinance.
Well, if you have negative debt, then it's like, come on, man, you give me all the debt you can.
Right, exactly. No, so these are things we need to work on. But the reason for this exercise is this: is that everyone has a short-term memory. Again, we live in a 3-second world. YouTube videos and internet. In the end, investing doesn't operate that way. These are long-term investment decisions built on core fundamentals of people getting dividends, companies buying back stock, and companies earning money.
Mark, we have one more minute before we have to go. Give us an update on the fund.
So once a month, we have a presentation for prospective investors in our brand spanking new offices, formerly bank office, downtown Novato. We talk last Wednesday of every month to get in on that. Give us a call and we'll send you an invite. We talk about our fund. It's been paying 8% for the last 3 years.
Now, this month, though, it's on a Tuesday because you're out of town, right?
Actually, yes, that's right. So it's going to be in 2 weeks. It's going to be on a Tuesday. But again, once a month, we do about a 45-minute presentation about how the fund works, how it's set up, how we make money, how you make money, safety and security features that go along with the fund. And again, when you're talking about rebalancing your portfolio, you really should be looking at some smart alternative investment strategies that can kind of juice up the yield that you earn overall on your portfolio. And an 8%, an investment paying 8% right now is probably something you might want to take a look at. So for more information, give us a call, 415-883-2150, 415-883-2150 at Pacific Private Money.
I think my favorite part is I earn more in Mark's fund in 1 month than I would earn in a year. Or actually, probably even 3 years.
Most banks are money market accounts. Yeah.
All right, here's our thoughts for the day. The wise does at once what the fool does at last. And what you get by achieving your goals is not as important as what you become by achieving your goals. Very good. Tune in next week to The Best of Investing. We're going to be giving away more free vacations for answering trivia questions. They may be sports, they may not be. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Good.
Before I forget, I had to write it down. I have a task for you.
Yes.
We may have hit our 300th show.
Wow.